What's up, everybody? This is Mark back with another weekly recap on my trades. I just gotta start off by saying that it was a good week. I am proud of the progress that I've made. I only traded 3 stocks this week. I had 5 trades, but I only traded 3 tickers. I traded 2 of them two times, and both were good trades. All of my trades this week were pretty much good trades. I was able to bounce back from my big loss last week on KODK. That was around $230, around 18% loss, I believe. Which I didn't have a good week last week, but I was able to weather the storm this week, and I clawed my way back. I fought back, and I recovered that big loss. And I'm still up for the month, which I'm proud of myself because my old self probably would have took that big loss and would have learned all the wrong lessons from it because I would have revenge traded, and I probably would have continued to add up more losses, and I'd probably be down on the month. But I am so happy to say that I'm still up on the month. Anyways, let's get into it. This first stock of the week that I traded was MYSD. Very good trade. A lot of lessons that I learned in this one. 1 year chart. So I'm thinking it could break the multi-day highs. It could really run because there's not much overhead resistance. Multi-day highs here had this big run up from less than $1 all the way to 350 with some fluff news. It seems like they want to try to get their stock up. The difference between any of these pops here, you see there's little pops that where they try to go, but they really couldn't, is there's actual volume this time. There's actual volume. There's people paying attention to this. These other ones, these really 1 day runs and then they came down quickly. But this one seemed to run, and it's run a couple days, come down. Now it's running. It seems to bounce, and I'm able to capture it here on the second bounce day. So on the second bounce day, which was in here, I was in. Now, what got my attention was, of course, this big run up and the potential that it could break these multi-day highs because there's a gap up here on the previous day before I bought it. So previous day, it held $2 support after breaking it, in the morning, gapped up, and it kind of hit it, came down, and then finally broke over it. Reached resistance again at 250, came back down, held $2 support. So now it's in this $2 250 channel. So my anticipation of the multi-day breakouts of 250, I'm thinking that the 250 breakout can lead to the multi-day high breakout of 350, and then it could really rip. So that's why I'm in so early. I don't like to always wait for the breakout sometimes because sometimes it's the chase and sometimes they're fake outs. So I'd rather buy in anticipation sometimes if I can properly get my risk right. Seems to be uptrending again with this nice little gap up, making higher lows in this channel, and I'm anticipating this breakout. So I'm in here. I was in here a couple times, and my last trade, my only gain, I traded it twice. I had a $32 loss, which I got scared out. I shouldn't have took that loss, but I cut losses quickly, and I had a bigger win. I capitalized 16%, $97. 30-minute chart. This is beautiful. The run up started right back in the beginning of the year. Exactly the first trading day, less than $1, around 60, 50 cents, and it runs to 350, comes down, and now it seems to be cutting back up, breaking nice multi-day levels. First trade. This is a 10-minute chart. Let's go back. Let's get more detailed in my trading, my entries. So I'm in here, the first trade at 232 on this candle. And I am in here because it broke this 225 key level, which is pre-market highs as well. And it's basically the red to green move. So I'm in here at 232 and I'm risking this 227. Now, why I decided to risk this candle and risk 227 and not 225, my first initial trade, I don't know. That's just a mistake I made. That's me not being properly prepared. That's me being a little lazy. And that's just, sometimes you gotta realize that you made a mistake and, just move on, which I did because I made a mistake. I cut losses here. It broke down below this candle at 227. It hit 225 and I was out at 226. Now my risk is 227 and it only went to 225. I could have risked 225 to begin with, but I did it. So when I got out at 226, I was at least smart enough to see that it wasn't going to crack, and I was wrong on cutting losses. So I quickly entered again on the next green candle at 232, same exact entry, except this time I was risking 2 more cents. I was risking the proper risk level at 225, which is why it's highlighted in green, because it was actually the proper risk level. And this is highlighted in red because it's actually the wrong risk level. So in this trade, if I had the proper risk level, I could have avoided a $32 loss, and I could have made just 97 bucks. Just little things like that sometimes that can make the difference in a trade. That could make the difference in you losing a little bit, losing a lot, or making a little bit and making a lot. I was out here at 261, so the second trade I was in here in this candle, and I was able to hold through 268. Nice. I love the trade. I just made a little mistake here, but overall I had this on my watch list the night before, and I executed the plan to a T, and I loved it. I was basically anticipating, after this big downfall, it came back. I basically treated this like a second day run when I entered, because it has this first day gap up again and it starts to uptrend, and then I'm in the second day after that. So the 10-minute first day run, and I'm anticipating the second day run with breaking out over these highs, which I got in here at 232, and once it broke over those highs, look, broke over it, and then it came down and it held, and I got out 268 with the proper risk level. That's what was important in this trade, having the proper risk level at 225. Overall, I made around like 60 something on this one. In hindsight, I made another something to learn from. The best entry was, of course, here. Once it broke this little ascending triangle. One time couldn't come down. Second time couldn't. Then it made a higher low. Third time made a higher low. Tried it again, made a higher low. Finally broke out. Then came back down and it held support, and then it just kept going. I mean, that's technical analysis 101, and it was beautiful to see. So that was my NYSE trade. I got KODK next. KODK, this one burned me. This is the one I was talking about, what gave me my $230 off. So I was making sure that I'm gonna stick to my plan on this one and actually have a plan this time. 1 year chart, here multi-day support, obviously. And what's funny about this stock and what gave me the confidence to take this play was, let me show you. Okay, here we go. CNET. This is the exact same chart. Look at that. See if I can make it a little smaller so you can get it side by side. Well, I don't think that's gonna work. So you can still see it like that. Look at this, exact same chart and exact same news that it was up, Big run up, big run up. Come down, double bottom, hold support. Come down, double bottom, and held support. Then a squeeze, a squeeze. This was the exact same chart pattern and the exact same sector. And to give me even more conviction to take the trade, it was the exact same day that it had squeezed. It had squeezed on the 6th day, just like CNET. Let's go back to the big run up, resistance, broke out, came down and it held that resistance, double bottom. Big run up, resistance, broke out the resistance, came back down, held support. I mean, this was just given to me. It was an easy trade, and I had to take it. So let's get into KODK. It was 9% win. It wasn't much. It wasn't a big win, because I wasn't able to really get in big, but it was a trade that I couldn't ignore because there wasn't really much risk. Solid support again here. So I was in here at 875 or 873, I believe. 873 is out here at 9.5. So basically the top here before it ramped up again and broke out in power hour. So like I said, CNET on that same day had the exact same chart set up, so I had to take it, had the big run up, consolidate with strong solid support base, and then squeeze. You know, squeeze was on the 6th day, and the catalyst was a black chain as well. You know, what more? I mean, there's no reason not to take this trade. So the intraday chart, the intraday charts really helps me pick my exits and entries. Multi-day charts, when I'm looking at multiple days, that helps me decide whether or not it's a good support level or resistance level and whether or not I should get in the trade. Intraday charts help me pinpoint my exits and entries, as well as 9 EMAs and 13 EMAs and parabolics. So high day breakout is what I'm looking at. I see it here, and I was thinking about buying it here at 820, but just because CNET was the exact same chart doesn't mean that KODK was going to do the exact same thing. Let me make that clear. So I wasn't predicting, I was reacting. If I was predicting, I would have gotten in here at 820 and risk $8. But there's no guarantee that the stock was going to squeeze like CNET did, because CNET squeezed when blockchain was hot. KODK squeezed, and I was fortunate enough for it to squeeze, but I didn't want to predict it and get in here at 820, because if it broke $8, it could have really dropped. Because at the same time, KODK was up on that 6th day. Blockchain news started to be not as significant as it was a couple days ago when CNET run. Bitcoin was dropping big time. It crashed 30%. So all cryptocurrencies went down 30%. So it seemed like this news was starting to wear off a little bit. So I wasn't too sure that this was going to give me the same squeeze like CNET did. But I had it on my watch list, and I reacted because once it broke the high day, I saw that it's the 6th day that they could squeeze, and it did. Broke out, came down a little bit, hit the 9 EMAs, and continued to grind up all day. So what was important on this stock was I reacted and not predicted, because I didn't want to waste a trade either. I reacted when it broke and it gained volume. And it was a good trade because I was in 873 out at 9.5. I was able to hold to this, hold 9 EMAs. 10-minute, there's a double top, 1, 2, and then you enter here at 873, which I did. That's why I was able to hold through this. Still have these green candles. Here, red candles, but in 10 minutes, they're green. So you gotta look at multiple time frames. So multiple time frames will help you stay in a chart, stay in a stock. So KODK, just like CNET. But it's important to remember you gotta react and not predict. Sometimes you could predict, but in this case, I was willing to react. ONCS, this was a stock that I should have haven't played to begin with. I was in here on this little green day, this little gap up. Like I said, no big reason to buy. It has a lot of resistance here, and it really doesn't have a sign that it could really run. It doesn't have any spikeability. I show signs that it could gap up and then come down, which it did. It gapped up, and the next day it came down. I didn't see that at the moment. But small loss, 6%, $50. Nothing big. And I stuck to my plan. 1 minute time frame. I was in here high day breakouts, but I would make it a point to myself to not buy just any old high day breakout, because this was really not a significant high day breakout. Broke 210, went up to 215. That was it. Came back down. I was in here in this candle, and I was risking $2 as my support. It was a round number, and it broke here, $2. So I was like, that could be support. But there was nothing playing this day. This was a slow day, and I was actually just reaching for a trade. But sometimes the best trade is no trade. Not really much to go over. I was out here at $2. And although it did come back after I got out, I'm glad I just got out. I don't even care about this making or losing a couple more cents. No real reason to buy. This was pre-market, couldn't do nothing, and then really choppy. And it could barely move, no volume. Like I said, I just reached for something because it was a slow day. But I can't do that. I need to stick to the best setups. And that's one other thing I need to start doing. Sticks to the best setups, because if I just play any old setup, I can't force something that's not there. Gotta take what the market gives me. Now, PLTN, this was another stock that I had played twice, and another great opportunity and great learning lesson. OTC stock, this is my marijuana craze. So let's look at the first entry. First entry, I was in this day, the breakout day. This was an overnight play. I had already went into this play thinking that I'm gonna hold it overnight. Nice multi-day breakout on an OTC stock in a hot sector after it's held its gains. And this is technical analysis 101. This is reliable. It's an OTC. OTCs are so reliable when they break out. So I couldn't ignore this, especially if this is a hot sector. So $31 win. That was so heartbreaking because I could have made so much more. And it was only a 6% win. But whatever. I learned the lesson. Like I said, OTC multi-D breakouts can really rip and are more reliable, especially on hot sectors. So I was in here at 0.31 on the first breakout day. And I was in pretty early. This is a 15-minute. This is all the way from the time it started to break out. Top out, and it really broke out. 30-minute time frame, multi-day breakout, and this was also my risk level. So proper risk level. A lot of my trading, I rely on having a proper risk level. So at 0.3 win, and I'm risking roughly, I think it was 0.28 was the top. Like I said here, next time need to take profits. I guess you could say I got greedy, but I'll tell you the story in a minute. 3-minute time frame. This has helped me pinpoint my entry, which wasn't a good entry, but I had the proper risk level. So what I'm thinking here's the breakout level, and it topped out. And it really broke out. Okay, once it really broke out, it hit the higher day breakout. I'm sorry. Okay, so yeah, like I said, not the best entry, but I had the proper risk level because it never touched it. It actually double bottomed above the level 1 time, 2 times. So I had even less risk if I'm thinking about it. Topped out here once, topped out here again, and then it finally broke out, and so I'm in here at 0.31. But the high day breakout turned out to be a fake out because it came back down. But the actual breakout level was here. So that's what I was able to use as my risk level. And it never touched it, came back down, never touched it, and then power hour, you can see it started to grind up really big. And I could have took profits here, but I was planning to hold overnight to begin with, which I did. 5-minute time frame. Never touch risk. That's what I love about my trades. I always have the proper risk level when it's a good trade. 10-minute time frame. 1-minute time frame. And like I said, I like getting all these time frames just to have them. Now here's exit day. The following day, on the second day after the breakout, and I failed to take profits. Like I noted here, next time it goes red to green to red, I need to exit. I could have exited in here. My goal was to exit around 4.4, but I never reached there, so I got kind of greedy. But the funny story is I had an order go 3 at 0.379 here, trying to get out, and I put my full 2,000 shares to sell, and I only got executed 100 shares at 379. But I did not know that, so I walked away from my computer, and when I see my realized gains for the day is only $1, I start to look into it, and I see that the stock is dipping hard, and I see that I only got 100 executed. So I am so mad at, and it's about here, about 0.35 that I see that. No, about, yeah, 0.36, 0.35 that I see that. But I failed to exit, and it continues to go all the way down, and I exited at 0.33. But this was another trade that I did good by just moving on, because the very next candle on the 5-minute time frame, I entered right after exiting. I re-entered. Same chart, just next time I'm in on the second day of the breakout, and I'm in here. So this is the dip at the open, and I exited here, and then the first entry, then the second time I entered here at 0.23, or immediately after I exited, because I saw a good opportunity. Holding holding previous day highs is what I'm using as my risk level, because it was also a double top, and this was a good gain, $111.36, 12%. This was another one that I was patient with because it didn't break out to power hour. I was in here 0.33, double top the previous day, and then I held that double top as support. Then it ramped up. I was in here and I held through all this because I had the proper risk level out at 0.37. Double top. Even though it dipped hard and I didn't make as much as I wanted the initial try, I saw that there was another try, another setup. So I got in. Still multi-day breakout and also a strong breakout. Went up to 0.37, 38. And then it confirmed the breakout by coming down and holding that breakout as support. Look at that. Beautiful. I was able to get out here at 0.37, and I was thinking here at 0.37 that it hit 0.38, and then it came back down. So that's the high that it had hit this morning. So it's double top. Let me get out 0.37. But it broke out, and this one probably could still continue to run come Monday morning. But I'm glad that I took what I took, and I played both times. I played it pretty good. Just next time I need to take profits and pay attention to what I'm doing next time. I don't know. I had some good lessons this week. Good trade setups, good charts. I didn't force trades, but one. It's okay. At least I cut my losses quickly. But I didn't overtrade either. Like I think I did the following week, which is why I lost big, and which is why I lost a couple times. 2018 started looking up. January is about to end, and I'm happy about the progress I've made. And I plan to end January as my first profitable month ever. Here we go, January 2018. This is my gains. I am up $343 for the year, 17%. And like I said, I plan to make January 2018 my first profitable month ever. Good luck to everybody come Monday morning, and I hope you guys can continue to make progress as well. Thank you.